US dollar bills, grocery store prices, gas station signs. There's finally some relief for American consumers. The latest inflation numbers are in, and the June 2025 Consumer Price Index shows that inflation is ongoing, cooling faster than expected. Rising hopes that interest rates cuts may finally be on the horizon. US Labor Department billings charts showing downwards inflation trend. According to the Bureau of Labor Statistics, the CPI rose just 2.5% year over year in June, down from 2.9% in May, and marking the lowest annual inflation rate since early 2021. Even more encouraging, core inflation, which includes food and energy, slowed to 2.7%, a key metric the Federal Reserve closely watches. Where prices are falling. Footage of grocery store alleys, gas stations, used car lots. So, where are American feels the difference? Grocery prices are finally stabilizing, with staples like eggs, milk, and chicken falling slightly. Gasoline prices have dropped nearly 5% over the past month. Used car prices, which soared during the pandemic, are now in steady decline, but it's not all good news. Apartment buildings, credit card bills, insurance paperwork. Some categories are still seeing price hikes. Rents and housing costs remain stubbornly high. Auto insurance and healthcare premiums continue to rise, and interest-sensitive services like airfare and credit cards rates have not budgeted much yet. What will the Fed do? Federal Reserve Building Chair Jerome Powell speaking. So what does this mean for the Federal Reserve? After 11 interest rate hikes since 2022, the Fed has kept rates steady at a two-decade high, between 5.25% and 5.5% in its battle to bring inflation under control. Wall Street reaction, traders cheering yield curve graphics. But now, with inflation falling and the labor market cooling, Wall Street is betting that rate cuts could come as early as September. Futures markets are now pricing in a 70% chances of a cut by November, and Fed officials are bringing to signals a shift. Quote from Fed Chair Jerome Powell: "We are encouraged by the recent inflation data. If the trend continues, easily policy will be the only on the table. Impact on you, the cut of home buyers, some business owners, and the student loan borrowers. If the Fed cuts rates, what does that mean for everyday Americans? Mortgage rates could begin to fall, helping first-time homebuyers. Credit cards, APRs, and auto loan rates may ease slightly. Small business could find it easier to borrow invest. But analysts warn that don't expect a return to near zero rates. The Fed is likely to move initially and cautiously, aiming to avoid retaining inflation or signaling too much, optimizing too soon. 2024 recession fears, job loss graphics, economics headline. There's also the risk of moving too slowly as job growth continues to slow and wage gains flatten. Economists warn that keeping rates too high for too long could tip the US into a mild recession. Political stakes rising. Biden speaking at the economic event, Republican leaders reaching. With the 2026 midterms just over a year away, the economic narrative is becoming increasingly political. President Biden's term is touting the numbers of as proof his politics are working, highlighting Biden's economy and the Inflation Reduction Act. Republicans argue that the damage is already done, pointing to years of price main and higher borrowing costs. Expect inflation and interest rates to be key issues as the campaign season heats up. Should the Fed cuts Rates now or wait? The Fed's next moves could shape everything from housing to jobs to the future of the US economy. For now, the trend is promising, but the road to full economy recovery may still have a few bumps ahead. Stay informed for more updates on inflation, the Fed, and how it all impacts our wallet right here. Like, share, and subscribe for real-time economic news.